Hi there, welcome to kneppyinvests. Now, I originally wasn't going to do an update to the performance of my portfolio this week because I have a lot of these ideas just percolating within my mind, and I just really want to explore those ideas a little bit further. But I think I'll get to those ideas a little bit later because what happened with the performance of my portfolio this week was actually really interesting. Not so much the fact that when you compare the performance of my portfolio to the benchmark, there wasn't much difference there, but how or what were the contributing factors or forces between my portfolio going up this week was a little bit different than what you usually expect. So typically it's capital gains, and in fact the capital gains of my portfolio went backwards this week, but my overall performance was actually positive by 1%. So why did the capital gains go backwards and the overall performance went forwards? Well, you understand when I get to that particular slide. So just for that little fact, something different happened this week to the performance of my portfolio. That's why I'm doing an update number 16. So just a quick reminder about my philosophy when it comes to buying. So I'm looking for really two things. I'm looking for breakouts in the share price, in particular positive announcements, and the most powerful sort of announcement I'm looking for are profit or earnings upgrades. And I'm also looking for shifts in momentum and sentiment. And when I'm looking to sell, I'm looking for the complete opposite, so a negative shift in momentum and sentiment. So instead of an uptrend developing, I'm looking for downtrends developing and negative announcements. That's the 100% rule. I always follow that 100% of the time. Whenever I see a negative announcement, I automatically sell. So what happened with the XJO this week? So if you don't know, I do like to follow the overall market, even though the overall market shouldn't have a major effect on the performance of my portfolio, but it can affect how I perform against the benchmark. So ideally, I prefer to see the overall market down because that means there's a better chance I'm going to outperform the market. When I do see, or when I have seen the overall market be up quite a bit, I actually tend to underperform the market in those sort of circumstances. So overall this week we did see the XJO up 0.8%, and unlike previous weeks where on the Friday we did see a big down day, this week we actually saw an up day. I think the XJO was up about 0.8%, and that's the only reason we're up for the week, because of trading on Friday. And we're still in this trading channel, right at the bottom of the trading channel, and we've been at the bottom of that trading channel for a few weeks now. So really wouldn't be surprised to see us get up towards $7,000 or 7,000 on the XJO over the next few weeks to be maintaining within this trading channel. If we fall below the channel, that would be very bearish moving forward. And I think most eyes are still on the bond yields at the moment. I did notice overnight the bond yields did go up a fair bit across the world, and we did see the Nasdaq down. Dow Jones could have been up a bit. So interesting things to see how that's going to affect the market in Australia on Monday. And more than likely, we'll see a little bit of a sell-off in the techs. And I think banks, energy, that sort of sectors might see a little bit of green. So wait and see until Monday. So I did make one acquisition this week, and that was Aussie Broadband. This is a company I've been wanting to buy for a few weeks now. The more I do research on this company, the more I like it. And I want this to be a long-term hold. That is not necessarily a strategy I do have within my portfolio, but the longer I can hold this company, the better. The share price right now is in a good uptrend, so that's a very positive thing about it. But I think this has the potential to be a long-term winner for any shareholder. And just everything I hear about this company is really, really good. People who are customers of this company just rave about them, and I think that's very positive at the moment. That's the sort of thing you really want to see. So I did make two disposals this week. So Zip was, I have two parcels of Zip. I have a trading parcel and a long-term holding for Zip. So I decided to sell out of my trading parcel at around $10 early in the week, or just under $10. And I'm just waiting, because during this short-term downtrend, a very obvious short-term downtrend, I either have done a video or am about to do a video on Zip. So have a look out for that. So I haven't decided whether I'm going to release that video first or this video first. So have a look at that, because it looks like the share price could be turning around, and if it I do get some signals or some confirmation that the share price is turning around into a short-term uptrend, I will actually buy into a short-term trading parcel in that regards. Smart Group did give me a dividend at the start of the week, and then I decided to sell out a few days later because the chart is looking fairly weak, and we'll have a look at that chart later on in this video. So this is the overall performance of the portfolio for the week, up 1.1%, but that's with dividends. Capital gains was actually negative for the week. 6 of my companies went ex-dividend and gave me some dividends. Now, overall, the best performing company was Stone Horse Energy. That was up something like 33% gain of $660. Their sister company, or I shouldn't say sister company, but the company they do have quite a few joint ventures with, Brookside Energy, was up quite considerably on the week. Stone Horse Energy and Brookside should be trading in a very similar pattern. So Stone Horse Energy could be a little bit behind in the gains at the moment. So hopefully the share price will continue to increase in the next week. Pact Group, a great buy. That was one of the most obvious breakout patterns you'll ever see, and that was up about 15% for the week and a gain of $600. And Treasury Wine up 331. That was another, wasn't an obvious buy, that one, but I did think there is some potential for some long-term gains with Treasury Wine. And there was also some rumors about a takeover of their business earlier in the week. I'm not sure where those rumors came from and what happened to them, but that did give a bit of an impetus to the share price. Worst performing stocks of the week, Aries Resources down $833 from about, 12 cents down to 10.5 cents. Not down a lot, but because I do have a fair bit in that company at the moment, that's why you see a fair bit of a loss there. Now, that's a company I transferred from my original long-term growth portfolio to this portfolio. I originally bought them at 5.6 cents. I have no reason to sell right now. I think that could test 10 cents. And if they do fall below 10 cents, that will be fairly weak. Now, the other two worst performing companies did give me some really good dividends. Tpc Consolidated down 557, but they gave me 303 of dividends. And they're following a very similar pattern to what happened about 6 months ago with their share price. And Dusk, even though it was down 273 for the week with dividends, it was actually a positive week for them. So $325 worth of dividends. So overall, a very good week in terms of overall gains, and the main reason behind that was the dividends I received. So I'm calling this the most previous week, the ex-dividend week, because when you compare my performance to the benchmark, which is the STW, which is the ASX 200 fund, you just look at capital gains, and during the whole week I was in the red and finished in the red by 0.36%. So if you take that in isolation, I significantly underperformed the market, which was up 0.92%. But 6 of my companies went ex-dividend, and those dividends gave me $1,100, which was a boost to the total returns of the portfolio of 1.46%. So overall, I was up 1.1%, which was a little bit higher than the overall market, which was up 0.92%. So overall, I'm very happy with this week in the performance of my portfolio, simply because of dividends. I actually did not expect this. I should have had a closer look at when my companies went ex-dividend. And if you don't know what ex-dividend means, I'm actually going to do a video on that during the next week. So be on the lookout for that video. Now to some charts, and the acquisition I made this week was Aussie Broadband, and I've just put in the trend there, that upward sloping brown line, that's the trend line there, and I decided to buy in around about $2.80 or something. I think it was $2.82, and that trend line is intact. I'd like to see the share price go through $3 on good strength, because if you go back to the late January, the share price did get up to that point. Not a lot of volume with that increase in share price in the middle of January, which was a bit of a worry, or would have been a worry if I was a shareholder at that point. But at this point in time, the share price over the past month and a half has been going up at a real good pace. This is the sort of chart I really like to see. None of that exponential growth in share price. I like to see a steady climb, because that is a more sustainable, less volatility. And when you have less volatility, less likely to see day traders come in. And I hate day traders with a passion simply because they love volatility, and I don't like volatility as much as they do. I originally bought into Smart Group around December last year because the share price went through that support level, which was resistance. Back then, share price kept on climbing up until the start of February, and then for some reason the share price has been dropping ever since then. So from a share price of around $7.60, it's now down to $6.21. Not sure what's happening with this sell-off. Not sure if maybe it's a large fund manager strategically selling every single day. We did see a little bit of a spike, or one-day spike in the share price when Smart Group released that half yearly. I thought that could have given an impetus to the share price, but the next 2 trading days, whoever was selling came back into the market and started offloading shares again. Now, start of last week, they did give their shareholders a 32-cent dividend, and then I sold 2 days later at $6.45 because it fell through that support level, and that support level more than likely will become resistance. So any buy in the future, the share price will have to go through that resistance level for me to buy back in. Now, I'm going to do a couple of slides on the best performing stock of the week, Stone Horse Energy. This is a 1-year daily chart, and if you go back to pre-August 2020, there was absolutely no interest in this company at all in the market. So you can see that with no volume. So at that point in time, there was no point holding this company unless you were the girlfriend or wife or interest of one of the directors or someone who worked for the company. Then we saw in the middle of August, the company released an announcement. I think it was an acquisition or something, and that brought interest in the market with that massive, you can see that with a massive spike in volume, and that really saw the share price starting to increase. So increasing interest in the company, increasing share price, and then we did see a peak where volume pulled back a little bit from October through to December, and then we saw another peak in volume, and that saw another increase in the share price. And then again, we saw decreasing volume, and the share price pulled back a little bit. And then in March, we've seen another increase in the volume, and again, we've seen a subsequent increase in the share price. And that should maybe trigger some instant thoughts in your head, the relationship between volume and share price increasing and decreasing. And hence this chart, or this slide I'm showing you right now. And you can see the relationship between share price and volume in Stone Horse Energy over the last 3 months. So this is going back 3 months ago. In January, we did see increasing volume or high volume coming into the market, and that corresponded to an increasing share price. So that's really bullish. But when you see decreasing share price, you want to see a corresponding low volume. So when the share price was increasing, the market was getting excited, and there was more buyers than sellers. But when you see the share price decreasing, you want to see a lack of sellers. And that just shows you that people who are holding the company at that point in time don't want to sell out. And that's exactly what we saw with Stone Horse Energy through late January into most of February. Share price was drifting back a little bit, but there was no volume, not a lot of selling at all. And then at the start of March, all of a sudden, the volume came back in, the buying came back in, and the share price started to rise in response to that increasing volume. So that's exactly what you want to see with a company's share price going up over the short to medium term. The next best performing company was Pact Group, with maybe the worst logo on the ASX. Maybe they should hire me and I'll give them a better logo, even though I'm not a graphic designer or not an artist at all. They can give me $100 and I can make a better logo than that. Rant, and because I shouldn't be saying bad things about this company, because there was the most obvious breakout on the release of their half yearly, and I'm showing you there was a bit of resistance on $2.80. It went through $2.80 on high volume, and that was the most obvious buy I've seen for quite a while. And ever since that breakout, the share price has just been going up and up and up. So it's gone from $2.80 all the way up to $3.64. There is potential that this could be a long-term uptrend developing here. The share price a few years ago got as high as something like $7.50 or $8, and there is that potential. The share price could get up there again. It's only potential at this stage. The release of their half yearly was the impetus behind this breakout, and they were, or management was bullish in that half yearly, and that's always something you want to see. So at this point in time, this was one of the most obvious buys I've had for a while, simply because of the breakout and the massive volume accompanying that breakout. You can see again the relationship between share price performance and volume. Another good performer was Treasury Wine Estates. This is a company I have owned in the past. I held this company for 3 days back in August of last year, and because they released their yearly report, which was the market really liked, and then 3 days later, the Chinese government then accused Australian winemakers of dumping their wine into the Chinese markets. So again, this looks like another sort of breakout. It was this breakout happened the day after they released their half yearly, which was interesting. Share price increased 12%. You can see that breakout with that very long green candlestick. Share price tested $10.50. Actually fell through $10.50 2 days, but I think it was just testing the support level. And then again, it bounced right back up. And I think it bounced up to $11 simply because of some rumors that there was a takeover bid for Treasury Wine, and those rumors haven't come to fruition just yet. So at this point in time, I would rather see, or I'd like to see the share price get above $12 to really confirm that there is a new uptrend in development right now. Now to the worst performing companies of the week, and the first one is Aries Resources. Now, I originally bought Aries way back in August of last year, and I have subsequently transferred this company to this portfolio. So bought it at 5.6 cents, and the most recent share price was 10.5. So I've done quite well out of this company, and you can see a most definite uptrend in the share price since, this is a 6-month chart, so since September of last year. And we did see really good performance when they released their half yearly. We did see the share price get up to 14 cents or so. And we have seen share price drifting back again on decreasing volume. I hope it holds above 10 cents. It did test 10 cents on Friday. Was it the 12th of March? And then bounced back up to 10.5. So at this point in time, still fairly bullish about this company longer term. So hopefully this share price remains above any sort of resistance level. I don't want to sell this company out, but if it does fall below 10 cents, I'll become a little bit more nervous about Aries Resources. Second worst performing company for the week was Tpc Consolidated, and one of the reasons they were the worst performing company was they did give their shareholders an 8-cent dividend on the 9th of March. But we are seeing a very similar pattern playing out right now that we saw in August of 2020. So my initial buy was 95 cents. And that was because we started to see a bit more volume come into the market for this company. This company is traditionally a very liquidly traded company, sort of company you don't really want to buy. And it's a problem I've had in the past week or so, because once 9th of March came around, I was thinking of selling out, but because they were illiquidly traded, the only way I could sell out is if I sold out at a lower price than what I wanted to. Now, in August of last year, we saw a lot of interest come into the market. You can see that increasing volume, and that drove the share price from $1 all the way up to $1.60. And that is one of the positives about an illiquidly traded company, is if the market becomes interested in the company, you can see the share price increase quite substantially. But when the market doesn't become interested, and what happened to the share price from September onwards, it just drifted down very slowly, went down to as low as $1.10, and then we just saw the share price drift sideways. The market again got interested in this company in the middle of February, just before they released their half yearly. So I think there was a lot of investors anticipating a good report, and it was a good report. And the share price rose from $1.40 all the way up to $3. And then since about a week ago, the share price has been drifting low again on decreasing volume. So you can see again the relationship between volume and share price movement just with TPC in the past 6 or so months. And finally, to Dusk, which has been one of my best performing companies over the past month or so, and a very obvious uptrend right now. You can see that with the share price movements since they broke out in late December on some good news. I think it was a trading update, and that's when I bought in at, I think it was $1.98. A lot of people are hesitant to buy when the share price has increased, by about 15 or 16%, but this was another very obvious buy for me, and the share price has gone from $2 all the way up to $3 in a few months. They did give a 15-cent dividend as well, so a nice little dividend yield. And the only reason I would sell out of Dusk at this point in time is if that uptrend is broken, and it could be, and I'm going to be following that rule absolutely. So if that uptrend is broken, I am going to sell. And that's it for update number 16 to Kneppy's portfolio. Hope you've enjoyed it. If you do have any questions, leave it in the comments section, in particular to any concepts I have raised that you might be unsure about. I will eventually answer any comments you do have. Might take me a while. Now I'm not a financial advisor, so although I am showing you what the holdings I do have in this particular portfolio, doesn't mean you should follow my strategy. Absolutely, because I think everyone should develop their own strategy because we're all different. Some people are more risk averse than others, some people are more risk taking than others, and I don't think your risk taking or risk adverse personality is exactly like mine. So I do really recommend developing your own strategy, and I'm just giving you some of my ideas in this video. So I'm not a financial advisor. If you do need some financial advice for your own circumstances, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.